Welcome to the Second Bite Podcast, where we talk with top entrepreneurs and CEOs about creating valuable companies through creative transactions. Now, let's get started with the show.
We are back at the Second Bite Podcast. Raman Sehgal is with me today from Raman Marketing out of the UK, out of the US, and now out of Canada. Raman, thank you for being with us.
Thanks, Todd. Great to be here.
Yeah, I'm excited for this for a bunch of different reasons. I like the international aspect, but again, you have built a really nice digital agency. You've partnered with private equity. You've grown the business. I want to talk about all those things, but why don't we start with an intro? Give me an intro to you. Tell me about the company, who you serve, and what you do for them, please.
Sure. Well, firstly, thanks for having me here, Todd. I'm a fan of the podcast, and I've learned a great deal actually from some of the guests that you've had on. So hopefully I can share some I'm going to say
Pressure
wisdom.
is on. Let's see how you do.
Wisdom might be too strong a word, but some insights and some experiences that help some of your listeners. So yeah, I'm Raman. I'm the founder of Ramarketing. So I started the business in 2009. And when we started, it was just myself for a couple of years, kind of classic accidental agency, owner. And it was kind of a side gig to start off with. In the early years, we did all kinds of stuff for all kinds of industries, but my background was in the very niche space of the pharmaceutical supply chain, which I'll come on to talk about. Very generalist agency, but with a solid kind of core in kind of B2B in the healthcare space. And that ultimately led us down a path of pivoting the business in 2016, which also led us down a much more of a global agency kind of model, if you like, which again, I can go on to talk about.
And you're global because the customers demand that?
Yeah. So I'll try and explain it in a way that I think most of your listeners will understand. So if your listeners are, let's say they've had a COVID vaccine at some point in the last couple of years, or any type of vaccine, the chances are that vaccine has been manufactured by one of our clients. It has been distributed by another one of our clients. It has been tested by another one of our clients. It's been packaged by one of our clients. So in the pharmaceutical and biopharma industry, a huge part of the way that industry functions is it outsources quite a lot. So this huge ecosystem sits beneath the large companies and the well-funded biotech companies. And these are the guys actually doing the work. And that's who we represent. So we aren't, we're not a traditional medcoms agency, for example, that does, the launch of a new product for a new market. That's not what we do. We're a very, very technical, scientific B2B agency. So we help these relatively industrial businesses that have great expertise, I suppose, reach pharmaceutical and biotech buyers, which again then makes us a very, very niche company in terms of who we serve. And it is a very global audience. So it's in the US in particular is a huge dominant part of the market for lots of reasons. But people get sick all over the world and people need drugs all over the world. And as such, it's a global audience. And therefore, our clients, interestingly, don't tend to navigate to one place. They're not all in San Francisco, or they're not all in Boston. They're not all in London. They're actually in very unsexy industrial parks all over the world. But their clients tend to resolve go around a couple of hubs. So hopefully that just gives you an insight into the space that we operate.
That's super helpful. And to give me a little bit of perspective, can you describe the size of the business today?
Yeah, sure. So we're about 85 people today and headquartered in Newcastle, which is in the northeast of England. We also have an office in Boston and a team on the East Coast. And as communicated today, we announced the opening of our kind of third international base, which will be in Toronto in Canada, which is very exciting. And I'm happy to talk about that. So yeah, very diverse, international, cosmopolitan team that works with clients all over the world. So our clients are based from the West Coast to the East Coast to across Europe to Asia. So that's kind of the mix of our clients. And the nature of what we do for them is quite broad. Actually, we are a classic full service kind of integrated agency. So we have at the front end kind of market intelligence, kind of deep kind of insight, competitor analysis, all that type of stuff. Given our kind of expertise in this particular sector, it's hard to replicate that bit. And then kind of moving on into kind of growth strategies, brand strategy, and then into the more tactical stuff like web and digital marketing and PR and SEO, PPC. So we do pretty much everything in house. As an agency, we outsource very, very little. But a big core of our business has been historically, digital marketing and PR and content creation. Those were the kind of key things that gave us traction, that led us to have a design team and a digital team and all that kind of thing.
And how would I think about approximate revenue size of a business with 85 folks?
That's a good question without me trying to give all the numbers away. So I suppose, if I use a proxy of, £100,000 per employee, that's a good way of kind of thinking about it. So we're, $10 million plus business, and,
Excellent.
And that's hopefully gives you and growing very, very quickly. So, we've proudly grown 14 years or 13 years in a row, depending on the first year. So we've had.
Well done. And so if I want to rewind a little bit, because you said you started in 2009, right? And you have a private equity investor. What year did you bring on private equity?
Well, actually, prior to that, we bought on an independent investor who was actually, it's amazing kind of turn of fate, but she was my first ever client in my first ever job. She ended up becoming my boss. She's from the pharmaceutical contract manufacturing. She knew the sector. She'd built and sold a business actually. And actually was one of my closest friends now. She invested in 2017, and it was never intended to be a traditional kind of investment. It was more, she was mentoring me anyway. She'd been very successful in business, and she had the experience that I needed. I always joke that she had the gray hairs that I needed to kind of navigate. I kind of didn't have a clue what I was doing in reality. A lot of us don't. So that was in 2017. And then we did a private equity deal in about a year, well, actually 18 months ago now. So April 2022, we completed with a company called North Edge Capital, who are based out of the Northwest, so headquartered in Manchester in the UK.
All right, so you brought on an outside investor in 2017. Was that here's some investment money, or was that more of a, hey, let's be in business together, let's partner together, and I want a chunk and I'll bring some money with me?
It's a great question. It was a bit of both, actually. I didn't actually need the money. It wasn't about the money, but I did end up taking a little bit of money off the table at that point in time. But that was almost a secondary thought. It was actually more having that experience around the table that could help guide us into kind of new territories. Not in a literal sense, almost like, the company was growing. I'd never managed a team. We didn't have a CEO. We were starting to internationalize systems, processes, all the stuff you learn on the journey. But when you're a naive entrepreneur, kind of agency entrepreneur, kind of making it up, we found a niche, and we were just, such a fun period. If I look back now, it was just like, it is. And before it gets all a bit too serious.
So that's 2017. And if you're more comfortable talking about employees, that's fine, but it relates it for us. Roughly how many employees did you have in 2017 when that happened?
I think, let me try and remember. I think we were probably about $1 million in revenue. We were pretty small at that time, which shows you the growth that we then went on over the next few years. So, I think over the last 5 years, I think our year-on-year growth has been around 40 to 50% average.
Okay. That's helpful. So you're hitting it, right? So from 20, let's call it 18 to 22, you're growing 30, 40 something percent. You're feeling good. You're hiring people, everything else.
I wasn't feeling good. It was a right pain.
So tell me about the outside investment from who you wound up with, which is North Edge. Tell me how you became aware that, geez, we should bring in a financial partner and sophistication, number one. And then number two, tell me about what the process was like that led you to conclude North Edge is your right partner?
Yeah. So I suppose if I rewind back to the back end of 2020, the start of 2021, like many people, I was living in Boston at the time. So I'd moved to the US by this point, and, we'd had another kid. So we had 3 kids, and it was just a lot on our plate. And I'm sure with your clients as well, you see this, the bigger it gets, the risk becomes bigger and it gets scarier. So in my mind, I couldn't believe what was happening in the business. As in, I was seeing the dollars in the bank account and just being like, oh my God, as like classic imposter syndrome. Oh my God, we're going to get found out here. Yeah. And for me, it was a few factors. One was a personal de-risking. It was kind of like, I need to find a way of not, my personal wealth is X, but my business wealth is exponentially more. And that balance scared me. And as the nature of our clients and the enterprise nature of our clients and the public listed nature of our clients were coming to fore, the risk obviously grows with that type of thing. The other thing was the life science market generally. So if you look at the pharmaceutical and biotech market, 2021 was the absolute boom year off the back of COVID. You can look back now and realize that, but you'll know better than me, but not many people are investing in retail and hospitality and all these types of industries in that 2-year period. So like tech, life science has got a huge amount of funding. And as a consequence of that, multiples were very, very high. And as a business as well, we did 80% growth in 2020. So you had these kind of 3 factors. You had the market was booming, the business was growing, and at a personal level, it felt like a good time. So, for me, that decision was actually made at the start of 2021, but it was a very personal decision. I'd not spoken, we'd hired a CEO by this point in time as well. And it was a decision that I then had to communicate to our CEO and CFO that, we decided that we were going to take the business to market. Being very honest, I didn't really necessarily think about private equity. I just didn't know what it would look like. I was pretty naive actually. And to be fair, the investment banker that we chose, and the reason we chose this specific investment banker was because we are so specialist. I needed an investment banker that knew how to articulate like exactly what it is that we do to the right audiences. And it was really hard for most investment bankers to get their head around what we do because we are so specialist. And so we ended up, you obviously have your own areas of expertise, but we ended up using an investment banker that had a very specific knowledge of marketing, medical marketing agencies, and the outsourcing sector that we worked in. It was just like this amazing. Yeah. So it just felt like the right fit. And, that individual had kind of given me an overview of what they felt the business might be worth at that point in time if we had a good year in 2021. So 2021 was obviously a key year in terms of hitting the numbers. And then, you'll know this better than me, but then we followed the process, if you like. And, we got a couple of the senior team members involved. We sent out the documents to relevant buyers, did some coffee mornings, interest of trade and private equity. And, then we sent the CIM, I can't remember what it's called in the US, but CIM, yeah.
Confidential Investment Memorandum. Yeah.
Yeah. So, and it was all, obviously, this is all mid-COVID as well. So we had to do everything. And I'm kind of laughing because, so we did, so I was living in Boston and I was in New York with my family and I got COVID. It was November, December 2021. And I was meant to be flying to London the next day. And we had a week of about, I think we had 15 investor meetings lined up. And I had my vaccine, thankfully, but it was like the Delta variant. So I was like knocked out. I remember my wife, I had to hire a car to drive back to Boston on my own. And it was just like the worst. And I had to do all those investor kind of meetings, those 2-way conversations, huge amount of private equity interest. Actually, that was the one thing. The thing that put me off actually speaking to the trades quite early on, the trade, even though I'd hired a CEO and we had a management team, trades wanted me to stick around and there was a clear component of earn-out for 3 to 5 years. And I just didn't really want to work for anyone. And that was why private equity ended up being the lead horse. And we can obviously talk about that more.
Yeah, I want to. Was the interest in the UK or the UK and the US?
Both, actually. Interesting. The trade interest was all I think it was all US based and Canada.
When you say trade interest, you mean strategic company.
Sorry. Yeah.
Okay.
Yeah. Strategic interest was out of Canada. And what I should have said, the other thing that prompted a lot of this whole go into market was we were approached 3 times at the back end of 2020. So unsolicited, 3 sizable agencies on 3 different occasions approached us. And that kind of was like, maybe we're onto something. Maybe we've got something of value here.
So let me pick on a couple of things quickly, because I hear them come up sometimes. Number one, if people are knocking on your door, what was your thought process as to why did you go hire a banker versus just negotiate it yourself?
I think, and we can come on, I know at some point you'll ask me about, educating yourself and, resources. And I'd educated myself at this point in time, or I went through the process of understanding how to run an M&A process and what that looked like. And it was very rare that you heard people pull off a good process without an investment banker. I think if anything, if you've got one buyer, then there's no competitive tension in that. And within that as well, for me personally, investment bankers are worth every single cent because their job is to get you the best price and run the process and take some of that pressure off you. And I think for me, I needed, because I'd never done it before, I also needed someone to hold my hand. And even though we had a very, with Fiona, our previous investor around, we had someone at the table who could see through all the BS, right?
Yes.
But we had an investment banker who could kind of guide me through it. And that was critical for us. That this is the biggest transaction. If any of your listeners haven't done a transaction, it's one of, because to the name of the podcast, it might not be the biggest, but it's going to be one of the biggest transactions and deals you'll ever do in your life, bigger than any business development deal you've ever done. You wouldn't buy a house without getting a survey, right? You wouldn't buy it, so it's the same,
same mentality.
Get smart, educated, relevant expertise around you.
So let me ask you this, because I hear it oftentimes. So I'll ask it in historically looking back. So when you took in money from the woman who's a friend and partner, do you look back and that was at a really low valuation of the business? Do you look back and regret that?
No, the exact opposite. It was one of the key, if I look at the 5 or 6 key decisions I've made in the last 14 years, it was definitely one of the key decisions. And, I love the fact that, Fee made 10 times her money in a couple of years.
Yeah.
And I insisted she got her money back as well. So her investment money, we paid her back. Because I was like, it was never about the money. And actually, Sorry. And I just think, the money is clearly important in these types of things, but there are, the relationships, the belief, the guidance, things like that are absolutely priceless. And because it was never about the money, it was like, I didn't need you for your money. I needed you for you. Yeah. And here's a check. And, we laugh about it now.
And so compare that to how you feel in hindsight, having taken the money 18 months ago from North Edge.
Still absolutely the best decision as well. Another key decision, it's, running a process like professionals like you do is life-changing for the entrepreneur and the founder in a few regards. There's clearly a financial component. If you've built a good business, the day post deal is very different from the day before, right? It's just life changes in a I'm going to say in a positive way. It has its downsides, which is interesting as well. But also the education you get, I think, on going through that journey is one of the best business educations.
The education about the business itself.
About running a process and seeing how an M&A process works, being able to view your business as something of an asset of value, because it's really hard to do it when you're in the day-to-day.
Right.
I remember saying there was right towards the other deal that we were about 5 days away from completion, and there was one deal point we couldn't agree on. And
can you say what it was?
it was around working capital. and
Always is, man.
And it was really, I could so completely understand North Edge's perspective. Like there was a bit of risk in the business based on some historic things. The chances of it ever leading to a risk is unlikely. And actually how it worked out really, really well is we picked up the phone to Liam and the North Edge team, and we just had a grown-up conversation, and ended up, what happened was a deferred consideration piece, which was, as long as the risk isn't there, the money will come. And actually I was comfortable with that. And I think it was, rather than chipping at the price, and, credit to North Edge, they never once did that. They kept to their word, and they paid to the cent what the original offer is, which says, and that's what their references all said, because I did check all their references before we decided on North Edge. And I remember saying to our attorney, I was always willing to walk away from the deal. At any point in time, I was willing to walk away from the deal. And the reason I was willing to walk away from the deal is we had a very profitable business making a lot of money anyway. So it wasn't about that. And I knew we'd continue to grow. But actually for me, it was the education. So I was like, if I've spent, and it costs a lot of money, if I spent a few $100,000 running this process, that's what I would pay for an MBA. And I pretty much got that during this process.
That's a great perspective on that. Another great perspective that I'll just call out is how helpful it is to sell a business or to partner with private equity when you are hitting your stride, when everything is going well, when you operate from a position of strength, because you can maintain that attitude. And the reason you still did your deal is because you're excited about the upside. You're not terrified of the downside, right?
Exactly. You're absolutely right, Todd.
As you went through the process, what surprised you most going through it?
What a bitch diligence is.
Not that much fun, is it? It's just time consuming.
Do you know what? I think the first time I met you, you might have told me that diligence is a pain. I think, one of the things that it surprised but also excited me was how much of the front end is about marketing and positioning. It's effectively, I remember reading in a book, like I educated myself, I read every book about exit, I listened to every podcast about exits and deals and private equity deals. And there was it was a phrase in one of them that said something like, you need to stop selling your product and you need to learn how to sell your business, or something. I'm paraphrasing. And right. It really stuck with me, which is actually, and so understanding what was enticing about our business. And I'd never looked at the business through that lens, right? That lens of our growth rate is phenomenal. Our EBITDA is off the scale. Our global presence, we had a US presence, which was really unusual. We had a management team. We have enterprise clients. It's a robust sector, fantastic tailwinds. It ticked so many boxes. There were also a couple of elements where we were like, we're not as good as these ones. But I think for me, like that looking at a business, like that has educated me now. The way I look at our business now, when we go to the board meeting and I'm looking at the quality of our earnings and the quality of a month, I'm looking at it very differently to what I was maybe a couple of years ago. And the thing I think I got not necessarily wrong, but like you said, what surprised me, I think what surprised me is how quick you need to make a decision. Because what happens is, you get LOIs and you very quickly have to decide who's in the running. And then you very quickly then have to make a call on who you're going to partner with. And what we did, we ended up having several offers and we ran 2 against each other. And it's not a long, and it was only a month to get to know each party really well. And that is not a very long time. And in hindsight, and one of the things I say to other founders of agencies or people thinking about do that is, if you think you're going to do private equity, if you think you're going to do a strategic, either way, build relationships well in advance with potential acquirers. And because you'll have a better feeling for whether you can work with them or not. Mm-hmm. And that's really tricky because everyone's putting on their best. Everyone's putting on their best
dating
stuff.
well, yes. It sounds like you have a good banker, but what I see from other good bankers is when you have several offers, you can get the economics to be pretty close to the same, right? I assume that happened with you. Was there something specific? And I'm asking this in the middle of the phrase that you said that everybody's on their best behavior. Was there a specific way that you learned to get to the kind of real truth about who these potential partners are, and then were able to match that up with a fit for you?
Yeah, it's a great question. And I think reference checking is important. So one thing I did is I spoke to people that had done deals with the private equity companies, that in particularly those that had gone wrong.
Were they all willing to share those?
Mm-hmm.
Okay.
I say, well, I mean, they aren't. I mean, what I did, I mean, particularly with North Edge, actually, I went through their website and went back through some old deals, and I said, "Can I speak to these people?" And they were willing to do that. And what was interesting, I think, for them was the word integrity was kept on coming through. That even when things don't go wrong, there was
when you talk to other people.
Yeah, and that was that was important to me. And to be fair, not that there was a huge issue on the other side. And the deciding factor, I mean, interestingly, I didn't go for that. The bid that we said no to had a better upside for me financially, and I didn't go with that bid because it didn't feel right. And the kind of deciding factor for me was, who do I feel more comfortable sat around the board table with?
What made the other guys not feel right? Was there a specific thing or just a gut?
You know what? They were really nice guys and clearly very smart. It's interesting because they had done a bit of a turnaround in their own PE company. So they'd come from a world of buying distressed assets. So the nature of their questions and how I think they struggled to get their head around our business as quick as North Edge did.
Right.
And ultimately, I mean, this is going to sound quite basic, but who could I be myself around? And I felt like I had to speak a bit more posh and put on a little bit more of an act. And it wasn't their fault. It was just how I felt. Right. And I think for me, I was like, I've got to work with these people for the next few years. I'm co-investors in this business now with whoever this is. The deal structures were very, very similar. Kind of classic P, cash component up front. Then the low notes rolled over, and then there was an element of deferred in one of them as well. In both of them actually, but one was much higher. And for me, it became less about the money at that point. The money was all in and around the same right. area, and so those were the key decision makers things for me.
And one of the things that I hear from clients of mine when they do a transaction like you're describing, right? I get a chunk of cash, I've got a chunk of equity, I've got a real partner now, and maybe a little bit of earn out. But getting the cash changes my risk tolerance in this business moving forward. Have you experienced that? And can you comment anything about that?
100% agree with you. That is exactly what I think it takes a weight off your shoulders that's been sat there for years. It's the financial security, oh my God, this is going to go belly up at any point in time. Like we live in fear of our businesses just disappearing. And for me, I think it takes over. There is a downside to it. And I was chatting to a friend of mine who had just done a deal, and he decided not to take cash off the table. And I was like, cannot believe you've done, it's an $8-9 million deal that he did for a partial, and he didn't take any cash off the table. And his thinking was that he thinks he would lose his hunger and his motivation if he had money in the bank. And I was like, dude, what have you done?
You should see a therapist before you make a final decision on that.
And in his defense, I think the upside is even greater for him, but he didn't take any off the table. Now, for me, to your question, I think there's an element of a bit of a honeymoon period a few months afterwards where you're kind of like, oh my God, like this is amazing. But then life actually goes back to normal quite quickly, whether it's a house or a car or holidays or whatever.
Because you made this comment when you were talking about strategics versus private equity, that you didn't want to work for someone. And I hear a lot, sometimes guys will say, well, I'm worried it's going to change. I got private equity now, blah, blah, blah. Has what you do on a daily basis and the way you feel about it, other than a little bit more rigor and sophistication around the financials. Has day-to-day changed a lot for you?
It has a little bit, and I'll explain why. So we have I when I moved to the States, I hired a CEO. So I hired a lady called Emma to run the business effectively. So by the time we did the deal, I wasn't running the business. I was still quite involved in certain aspects, particularly on the business development and marketing and kind of innovation side of things. But actually the day-to-day of systems and processes and people management, none of that. So all that's happened is since the deal is that transition is probably become more apparent, where we have effectively me as the founder and global president, and then we have a CEO that's running the business day to day. So, it's not a good, well, my understanding anyway is businesses are valued less if they're reliant on one person, i.e. the founder. And so for us, it was like, how do we get the best out of me, Raman, without I don't need to be there every day running the business. So actually what ended up happening, and we brought in, so a chairman as part of the transaction as well. And I worked really closely with North Edge and the chairman to redefine my role and how I add the greatest value on the business. And that's been done in a very collaborative, a very pleasant way. I suppose Emma might have a different answer than me, right? Because she's running the business day to day. So there's probably more pressure on her from a P&L kind of numbers perspective.
And the concept of the chairman and everything else, you knew that going in, that this was their strategy and their approach. It didn't get sprung on you post-close.
No, and I don't know if it's the same in the US, but it's very typical in the UK when a PE transaction is done, a new chairman comes in. And actually, North Edge had encouraged us to meet potential chairman in advance, which is a great strategy from their part, because we were more bought in, right? Because we met.
Right. Some quality people, I assume.
Some really good, super impressive. And actually, Paul, who ended up becoming our chairman, we had an hour with him, and they were like, this guy's not available. And we were like, we want this guy.
Yeah. Do you guys have acquisition as part of your growth strategy? Will you acquire other businesses?
So it's interesting. That's one of the things that sits with me. So I have global, geographic expansion, helping build the profile of the business, and within that, and strategic relationships. So we have really good relationships with lots of private equity companies. Now that's not necessarily for us, because private equity companies buy our clients. So what tends to happen is, if a private equity company buys, say, a contract manufacturing organization, the pharmaceutical sector, they're buying it because they see growth value. And one of the neglected areas is often business strategy and marketing. Yeah. And so what tends to happen is, if we build those relationships, then the referrals and opportunities come through the kind of owner network. And now I've been through a PE transaction, and as a founder, there's a credibility piece that comes with that. And I'm not sure if you see that with your other clients. And so I can have pretty peer-to-peer conversations with PE companies where they have a bit more, not that they never had respect for me, but there's a slightly different level of, okay, this guy's been through a PE transaction. He knows how it works, and that makes us kind of more attractive. And so, as part of that role, then M&A also sits with me, and it's tricky, right? Because we're growing quickly. So if we did do an acquisition, it would probably be driven by one of two things. One will be a pure play capability, which is, we need to really, whether it's a digital marketing thing, or whether it's a content thing, or who knows at this stage. It's too early to know. It could be driven by geography. We don't have a West Coast presence. We don't have an Asia presence, and actually don't have a mainland Europe presence. There are three obvious areas that we could build a presence. That's a bit of a.
I'm sorry to cut you off. If you were to acquire capability or geography, would it only be in pharma and biotech?
Yeah, I suspect it had have to have a bit of a significant component of that. And it's a good question. And the third area is one which is slightly more bullish, which is, you do it for scale, i.e. we buy a version of us elsewhere in the world. Yeah. Obviously, then you've got, with any M&A, there's an integration piece, and how does that work? But I don't think nothing's off the table at the minute, but it's not our priority. It's funny because obviously we announced the Toronto thing yesterday, and the journalist that interviewed me was pushing me for that specific, obviously. And I was like, look, you just never know. And having been to a deal now, like I think we would be a good acquirer, if that makes sense, because we put so much emphasis on culture and integration, but it has to be the right one. And we've not done one before, but I mean, you'll know as part of the narrative for a future PE transaction, if we do one, and that second bite piece, if we've done an acquisition, like that's a really tasty piece of information. Like, if we say, look, with this headroom is to go from here to here, we've already done one, and we've done one acquisition. We want to do these 5, and we've already identified them. Your market will be like, yep, we want these guys.
It helps a great deal. So, your openness and willingness to share here, Raman, is really, really helpful. It's interesting to get the perspective of somebody in the UK, but some of the same themes are consistent wherever. So your sharing there was great. Ask a last question, because I think it's always helpful. I'm going to go back to your conversation around due diligence. So, it's a lot. You got to provide a lot. It's a little bit mind numbing. It's all those things. Everybody gets through it. If you were doing it again, is there a different approach you would have to providing due diligence, or something you would do differently that would be a piece of advice you could pass along?
I think we would have just, if I reflect back, I kind of sprung it on my team quite like our management, and I made that decision almost in isolation as the founder. And as a consequence of that, our data wasn't in the right shape to be ready for a transaction. And as a consequence of that, our investment bank, I think, had to do quite a lot of work with our team to get the data in the right thing. So for me, I think it's a really tricky one, because, we went to market very quickly, in the sense of, if it was a year before, I wouldn't have even entertained it. So I wouldn't have wanted to spend money being ready. It's a really tricky one, but actually if there are people there listening who are founders or CEOs of similar businesses, and you think you're going to do a transaction, I would take some professional advice to whether you outsource it, or you get a CFO, or you work with someone like yourself, which is, if I ever go to market, what does the data need to look like? What do my financials? What do my legals? And get your house in order before you do it, because that, if you invest and do that right up front, I think it makes the diligence piece much easier. Whereas for us, I think the diligence piece was probably not particularly difficult for our deal. It was just, we'd never been through it before. So they're asking questions that are just, you're like, why are you asking these questions? Like, do you not understand our business? But you understand that, they're investing a lot of money in the business. But I think that's it. Yeah.
And they also have a lender that doesn't care if they understand it or not. They've got a whole bunch of boxes on their spreadsheet, and they have to check them all before they can get approval, right? So there's that element as well.
One thing we did well, which I think, our lawyer advised was, and again, you might have to translate it from a US perspective, but we did like the heads of terms, like the key deal points. We nailed them before we did any of the legals. So we were very agreed on, rollover, price, share, what all of that stuff would look like. So there was no negotiation on those things further down the line. And actually all the legal points were super minor and actually very, very quickly dealt with. But again, I think I had great advice from our attorney, a guy called Duncan Reed in the UK, to do that. And I think that probably saved us, so much.
Oh, it certainly does, right? If you can grind through a bunch of those things on the LOI, when you have the most amount of leverage as the seller, that will not only save you a bunch in legal, but it will solve a bunch of future potential problems, and will speed your process along. Tremendously.
Exactly. So, yeah, so and I think Todd, for someone like you working with these companies, is like you would be able to advise companies when they're at their most valuable, right? Like you. For me, like if I'm looking at an agency now as an acquirer, right, what I'm looking for is strong retainer revenue, right? Low client concentration, healthy EBITDA, relevant clients, good, low churn rate. This language I talk about now was like, it's good business practice, but I didn't know the lingo. And I think even educating people on how important, you're not going to nail every single one of them, but if you can nail 70, 80% of them, you're going to have a really good asset to take the market.
Well, that's well said. I also think, which is the purpose of this podcast, I can blabber on about the stuff that I see and experience when we help clients, but hearing it directly from you and others that have gone down that road, that have been a founder, that have built from scratch, that are in the digital space is just really, really helpful. And I appreciate you carving time out of your day to share that with us. It'll be really exciting to see how the business continues to grow. So continued success. And thanks again for spending time today with us.
No worries, Todd. You didn't ask me a question. You always ask the community resource question. I do listen. I can't believe you haven't asked me that one.
Good. As far as
you always ask. You say something like, is there one resource or a resource that you would recommend to clients?
Good man. Thank you.
I do listen.
Yeah, and I'm glad that you do, but it's also an important question. So shame on me for skipping that. But the question is there a person or a book or an experience that you have been through that has had a kind of a lasting impact for you that you would share?
So when I went for a walk at lunchtime, I thought you would ask me this question. I didn't think I'd have to prompt you anyway, Todd, but I thought you would ask me. There are clearly people. I've mentioned Fiona. There's lots of books, but the way I thought about it was less about one specific item, but more a habit, right? And so I look at the success that I've been able to have personally within the business and other businesses that I've started. And a lot of it I can pinpoint back to building a learning habit where I've carved time out for myself every single day to listen to your podcast, Todd, to read a book and to read a blog. That's it, right? So my time commitment every day is less than 30 minutes. And it might be a bit higher if I'm listening to podcasts when I'm commuting or at the gym or running or whatever. But honestly, it's the one habit that I think is the most underrated habit that has drastically changed my life.
Create space for that
every single day, right? So and I can't remember if I told you this, but I wrote a book during COVID called The Floundering Founder, and that book is absolutely designed for founders and CEOs of service businesses, but agency businesses like the ones we talk about, where you reach a bit of a point where you're like, oh God, I don't know how to take this further. And, for me, there were certain things that I did in my business that ultimately led to the growth of the business. But the other thing I did at the similar time is I worked out that I need to also invest in myself and build a habit of investing in myself, because your business will absolutely consume you to death if you allow it to. There is not enough hours and days and years that your business will not consume you. So you have to be disciplined. And for me personally, and I write about it in the book, and it's the one that I think is the most relevant for today, is, build whatever your schedule looks like, just build time to learn. And for me personally, what that looks like is I read 10 pages of a book every morning. That's it, 10 pages, right? I listen to a podcast every day, and it's always when I'm doing something else, typically walking, running, at the gym, commuting. And then in the evening, I'll always just read a quick marketing blog, and that's it.
And that's we could spend a whole nother episode on that and why that's valuable. I think you're right, though. It is easy to have the business continue to consume you, and that is at the detriment of your personal well-being, your family's well-being, your balance in life, and all those kind of things. And I think we sometimes might fool ourselves that we'll spend 100% doing this for just a short period of time, and then we'll be somebody different later. And I don't know that I have a lot of examples where that's actually happened. And The Floundering Founder, the book that you wrote, people can find that, I'm sure, on Amazon or anywhere.
Barnes and Nobles, Amazon, all the good places.
Yeah, and on the show notes on the podcast, if you go to secondbitepodcast.com, you can find it right there on the show notes. You can find Floundering Founder online as well very easily, and get more detail around some of the things that have helped you build a really global business. It's great to be able to say that now in three countries and on 2 continents. So it was such a pleasure to have you Raman, thank you again. It'll be great to watch your continued success, and thank you.
Thanks, Todd. Thanks for having me.
Thanks for listening to the Second Bite podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.